Gold prices pare some of their earlier losses on Tuesday as a softer US dollar made the metal more attractive for buyers. However, gold is still range-bound and struggling to break above the key $3,400 level. Let us take a look at the factors that are influencing gold prices and what this means for investors like you. Hey there! Welcome to our channel, your place for the latest news and analysis on everything precious metals. Spot gold was trading at $3,372 an ounce by 12:30 p.m. ET, having risen 0.2% on the day after earlier falling as much as 0.8%. The gold market was initially down due to the release of the Federal Reserve's latest policy meeting minutes, which showed that the central bank is committed to keeping monetary policy restrictive for the time being. This is because inflation is still high and the labor market is still tight. However, gold pared some of its losses after the US dollar weakened against a basket of global currencies. This makes gold more attractive for buyers who are not dollar-denominated. As a result, gold prices have risen over the past few hours. Despite the slight rebound, gold is still range-bound between $3,350 and $3,400. It's been consolidating in this range for the past week as the market digests the recent run-up in prices. Additionally, the market is also awaiting the release of the next batch of economic data, including the U.S. jobs report for December, which will be released on Friday. This is being seen as a key event risk for the gold market as it will give clues about the future path of monetary policy. If the jobs report shows that the labor market is cooling as expected, then this will be seen as a positive sign for gold. However, if the report shows that the labor market is still tight, then this could put downward pressure on gold prices. In terms of technical analysis, gold is still in an uptrend. The short-term trend is up with strong momentum. The intermediate-term trend is also up but with a lack of momentum. The long-term trend is up with a lack of momentum. There is resistance at the $3,400 level and support at the $3,350 level. So what does all this mean for investors like you? Well, we think that gold prices will continue to consolidate in the near term as the market digests the recent run-up in prices and awaits the release of the U.S. jobs report. We don't expect gold to break out of its current range until after the jobs report is released. If the report shows that the labor market is cooling as expected, then we think that gold could rise towards the $3,400 level. However, if the report shows that the labor market is still tight, then we think that gold could fall back to the $3,350 level. In terms of strategy, we think that investors should continue to hold gold as part of a diversified portfolio. Though we don't think that investors should buy gold at current levels. We think that investors should wait for gold to break out of its current range before buying. What do you think? Let us know in the comments below. If you enjoyed this video, please give it a thumbs up and share it with your friends. Subscribe to our channel for more videos like this. Thanks for watching. We'll see you next time.